CA Exam Series. E-Learning. This is Sarah. I am gonna teach you GST classes. Welcome to GST Animation Lectures, innovative and student-friendly. CA Exam Series. Your success begins here. An invoice is a commercial instrument issued by a supplier of goods, services to a recipient. It identifies both the parties involved, and lists, describes the items sold, services supplied, quantifies the items sold, shows the date of shipment and mode of transport, prices and discounts, if any, and the delivery and payment terms, in case of supply of goods. Significance of invoices has enhanced manifolds under GST regime. The reason behind the same is the invoice matching mechanism that has been introduced under GST. For the purpose of claiming the input tax credit, the invoice matching needs to be done. The inward supplies of the person claiming the credit, recipient, should match with the outward supplies of the suppliers. Thus, a registered person cannot avail input tax credit unless he is in possession of a tax invoice or a debit note. Under the GST regime, an invoice or tax invoice means the tax invoice referred to in Section 31 of the CGST Act, 2017. This section mandates the issuance of an invoice or a bill of supply for every supply of goods or services. It is not necessary that only a person supplying goods or services needs to issue an invoice. The GST law mandates that any registered person buying goods or services from an unregistered person also needs to issue a payment voucher as well as a tax invoice. The type of invoice to be issued depends upon the category of registered person making the supply. The provisions relating to tax invoices, debit and credit notes are contained in Chapter 6, Tax Invoice, Credit and Debit Notes, Sections 31 to 34, of the CGST Act. State GST laws also prescribe identical provisions in relation to tax invoice, credit, and debit notes. Tax invoice issued by a supplier of taxable goods/taxable services. 1. Supplier of taxable goods is required to issue a tax invoice. A. Before or at the time of removal of the goods where the supply involves movement of goods. B. Before or at the time of delivery of the goods to the recipient where the supply does not involve movement of goods. 2. Supplier of services is required to issue a tax invoice. A. Before provision of the services or B. After provision of the services but within a specified time. Manner of issuing the invoice. Supply of goods. 1. Invoice in triplicate. 2. Original copy for recipient, duplicate copy for transporter, and triplicate copy for supplier. Supply of services. 1. Invoice in duplicate. 2. Original copy for recipient, and duplicate copy for supplier. Contents of tax invoice. 1. GST of supplier. 2. Consecutive serial no and date of issue. 3. GST of recipient, if registered. 4. Name and address of recipient. 5. HSN. 6. Description of goods or services. 7. Quantity. 8. Value of supply. 9. Taxable value. 10. Tax rate. 11. Amount of tax. 12. Pause. 13. Address of delivery. 14. Tax payable on reverse charge. 15. Signature. Revised tax invoice. Revised tax invoices to be issued in respect of taxable supplies affected during this period. Effective date of registration. Date of issuance of Certificate of Registration. Consolidated Revised Tax Invoice, CTRI, may be issued in respect of taxable supplies made to an unregistered recipient during this period. In case of interstate supplies, CTRI cannot be issued in respect of all unregistered recipients if the value of a supply exceeds 2.5 lakhs during this period. Particulars of the debit and credit notes are also same as revised tax invoices. Consolidated Revised Tax Invoice. A registered person may issue a consolidated revised tax invoice in respect of all taxable supplies made to an unregistered recipient between date of grant of Certificate of Registration and effective date of registration. However, in case of interstate supplies, a consolidated revised tax invoice cannot be issued in respect of all unregistered recipients if the value of a supply exceeds 2.5 lakhs. Bill of supply. Effective date of registration. Date of issuance of Certificate of Registration. Revised tax invoice. Consolidated revised tax invoice, CTRI, may be issued in respect of taxable supplies made to an unregistered recipient during this period. In case of interstate supplies, CTRI cannot be issued in respect of all unregistered recipients if the value of a supply exceeds 2,50,000 during this period. Particulars of the debit and credit notes are also same as revised tax invoices. A supplier supplying exempted goods or service, or a supplier who has opted for composition levy scheme, has to issue a bill of supply instead of a tax invoice. A bill of supply is not eligible for claiming input tax credits. A. Taxpayer supplies exempted goods, services, then issue a bill of supply. B. Taxpayer who has opted for composition scheme makes a supply, then issue a bill of supply. Supplies not exceeding R'(S.200/). A registered person is not required to issue a tax invoice in accordance with the provisions of Clause B of subsection 3 of Section 31, that is in respect of supply of goods or services, or both, where the value therein does not exceed a sum of Rs.200, subject to the following conditions, namely: A. The recipient is not a registered person, and B. The recipient does not require such invoice. However, in respect of such supplies, the supplier shall issue a consolidated tax invoice for such supplies at the close of each day in respect of all such supplies. Continuous supply of goods. The invoice, tax invoice or bill of supply, is required to be issued when the statement or a running claim is issued, or when payment is received, whichever is earlier. Continuous supply of services. For continuous supply of services, a tax invoice is required to be issued when payment date is ascertainable as per the contract on or before the due date for payment, or when payment date is not ascertainable from the contract on or before the time when the supplier of services receives the payment, or when payment is linked to completion of an event on or before the date of completion of the event. Exports. In case of exports of goods or services, the invoice shall carry an endorsement: supply meant for export on payment of IGST, or supply meant for export under bond or letter of undertaking without payment of IGST, as the case may be, and shall, in lieu of the details specified in Clause C cited supra, contain the following details: 1. Name and address of the recipient. 2. Address of delivery. 3. Name of the country of destination, and 4. Number and date of application for removal of goods for export. Goods sent on approval. Invoice in respect of goods sent on approval is required to be issued at the earlier of the end of 6 months from their removal or approval to accept supplies indicated to supplier. Cessation of services. On cessation of a contract for supply of services, the invoice is required to be issued to the extent supply is complete prior to cessation. Receipt voucher. When advance is accepted, receipt voucher is being issued by the supplier. Where at the time of receipt of advance, rate of tax is not determinable, then tax shall be paid at 18%. Where at the time of receipt of advance, nature of supply is not determinable, the same shall be treated as interstate supply. Refund voucher. When advance is refunded, then issue refund voucher. Payment voucher. Payment voucher is to be issued by recipient of supply liable to pay under reverse charge. Moreover, a registered person who is liable to pay tax under reverse charge, under Section 93/94 of the CGST Act, shall issue an invoice in respect of goods or services or both received by him from the supplier who is not registered on the date of receipt of goods or services, or both. It is important to note here that intrastate supplies of goods and or services received by a registered person from an unregistered supplier are exempt from tax provided the aggregate value of such supplies received from all unregistered suppliers is up to 5,000 in a day. Further, where the aggregate value of such supplies covered under Section 9(4) exceeds 5,000 in a day from all the unregistered suppliers, the registered person may issue a consolidated invoice at the end of the month. This provision also applies to a bill of supply. Delivery challan. Rule 55 specifies the cases where at the time of removal of goods may be removed on delivery challan and invoice may be issued after delivery. 1. Delivery challan in triplicate. The delivery challan shall be prepared in triplicate, in case of supply of goods, in the following manner. Original for consignee. Duplicate for transporter. Triplicate for consignor. 2. Declaration in e-way bill. Where goods are being transported on a delivery challan in lieu of invoice, the same shall be declared in e-way bill. 3. Tax invoice to be issued after delivery of goods. Where the goods being transported are for the purpose of supply to the recipient but the tax invoice could not be issued at the time of removal of goods for the purpose of supply, the supplier shall issue a tax invoice after delivery of goods. 4. Goods transported in SKD or CKD condition. Where the goods are being transported in a semi-knockdown or completely knockdown condition. A. The supplier shall issue the complete invoice before dispatch of the first consignment. B. The supplier shall issue a delivery challan for each of the subsequent consignments, giving reference of the invoice. C. Copies of the corresponding delivery challan shall accompany each consignment along with a duly certified copy of the invoice, and D. The original copy of the invoice shall be sent along with the last consignment. Credit note. Registered supplier of goods or services or both may issue credit note in the following situations. 1. Taxable value in invoice greater than taxable value in respect of such supply. 2. Tax charged in invoice greater than tax payable in respect of such supply. 3. Where the goods supplied are returned by the recipient. 4. Where goods or services or both supplied are found to be deficient. Debit note. Registered supplier of goods or services or both shall issue a debit note in the following situations. 1. Taxable value in invoice less than taxable value in respect of such supply. 2. Tax charged in invoice less than tax payable in respect of such supply. Debit note shall include a supplementary invoice. Details of debit note. Credit note to be declared in return. Credit note. Any registered person who issues a credit note shall declare the details of such credit note in the return for the month during which such credit note has been issued but not later than 1. September following the end of the financial year in which such supply was made, or 2. The date of furnishing of the relevant annual return, whichever is earlier. Debit note. Any registered person who issues a debit note in relation to a supply of goods or services or both shall declare the details of such debit note in the return for the month during which such debit note has been issued. No credit note shall be issued if the incidence of tax and interest on such supply has been passed by him to any other person. E-way bill. E-way bill is an electronic waybill for movement of goods which can be generated on the GSTN common portal. A movement of goods of more than 50,000 in value cannot be made by a registered person without an e-way bill. E-way bill will also be allowed to be generated or cancelled through SMS. When an e-way bill is generated, a unique e-way bill number, EBN, is allocated and is available to the supplier, recipient, and the transporter. When should an e-way bill be generated? E-way bill will be generated when there is movement of goods in relation to a supply. For reasons other than a supply, say a return, due to inward supply from an unregistered person. Who can generate an e-way bill? E-way bill must be generated when there is a movement of goods of more than 50,000 in value to or from a registered person. A registered person or the transporter may choose to generate and carry e-way bill even if the value of goods is less than 50,000. Unregistered persons or their transporters may also choose to generate an e-way bill. This means that an e-way bill can be generated by both registered and unregistered persons. However, where a supply is made by an unregistered person to a registered person, the receiver will have to ensure all the compliances are met as if they were the supplier. We hope this video helped you in gaining knowledge. See you soon with another video. This is Sarah, signing off.